Hi there, welcome back to Buy Now, Sell Now. Time now to interact with the management of Bank of India. We have Mr. Rajneesh Karnatak, MD and CEO of Bank of India joining in. Sir, thanks so much for joining us and good morning. First, let's begin with the rising pressure on your margins that we've seen this time around. Loan yields have declined sharply by 28 bips this quarter, while cost of deposits have increased by 2 bips. Now, this overall has resulted in declining NIMs, almost a 20 bips cut coming in on that front. Going ahead, how do you think the outlook will be for NIMs and what would be your guidance on that front?
So as regards our NIMs are concerned, yes, our NIMs have gone down. We are at 2.82. However, if you see the domestic NIM, we have a very healthy domestic NIM at 3.10%. So the decline in NIM is basically because of the reduction in the yield on advances which has happened. Though the yield on advances, if you see, is at around 8.46% for us, and the cost of deposit is at around 4.70% for us, and there is a healthy gap of more than 3%, in fact 3.4% for us. So going forward, we feel that if there is further reduction in rate of interest by the RBI on repo side, definitely there will be some more pressure on the NIMs by at least 15 to 20 basis point if the repo comes down by 50 basis point. That is what we are anticipating. However, we are making all efforts to protect our NIMs in the coming financial year 26 by way of improving our MCLR advances, number one, and also number two, by reducing the cost of deposits by more of CASA deposits and more of retail term deposits.
Good morning, Mr. Karnatak. This is also joining in the conversation. Earlier, you had actually mentioned that the bank can achieve deposit growth of about 13 to 14%. If you look at the year that we've ended, that is FY25, with about 11% growth with decline in the CASA. The commentary from other banks, if you see, they suggest that there will be some pressure on CASA deposits. What's your actual read-through on all of that? How should we read it, especially when we talk about Bank of India? Any guidance you can help us with?
Yeah, so if you see, it's a correlation. Deposit and advances are a correlation to each other. So we have grown our overall advances at around 13 to 14%, and deposits we have grown at around 11 to 12% on a global basis. CD ratio we have pegged at around 81%, and the current account CASA ratio is at around 40%. So if you see our CASA percentage, 40% is a healthy number, though as you rightly said, we have come down. There is some pressure on the CASA, but we have put in a lot of strategies in order to increase the CASA. This year also, if you see, there has been an incremental growth of CASA of around 10,000 crores on a YOY basis, from 2,69,000 crores to 2,80,000 crores. This year also, what we have done is we have already opened 211 branches. FY26 will be opening around 200 branches. We have already identified 1,000 branches, which will be HNI branches, where the customers will be qualified as a HNI if they have a quarterly average balance of 5 lakh and above. So a lot of strategies have been put in place, like revamping of the products, putting in new products, revamping of our analytics department, digital onboarding of the customers, our CVB department through which we give the customer service, and all these kinds of things will help us improve not only the CASA but also the retail term deposits of the bank, thereby further reducing the cost of deposit for us and thereby improving the NIM.
Okay, and moving on, let's also talk about your operating profit growth this quarter. We understand that high recoveries have supported your PPOP this quarter. Help us understand if there was any one-off that you've seen in the quarter gone by, and also help us understand how will non-interest income shape up from here on.
Yeah, as our top line is growing healthy, both on the domestic side and on the international side, so is the profitability. If you see our operating profit, we have grown our operating profit by on a YOY basis by 16%. And if you see the net profit, we have grown the net profit by around 45%. So if you see the trajectory of the Bank of India net profit from 2,000 crore plus in FY22, we have grown to 3,000 crore plus in FY23, then 4,000 crore plus in FY24, and now 9,000 crore plus in FY25. And similarly, on the non-interest income also, we are growing at a very healthy pace. And this time the non-interest income is also because of the good recovery we had in the return of accounts recovery, which was there, and also from the treasury income, wherein we nearly 3 times the treasury income was there for us, wherein we had built up a good portfolio in the treasury income when the rate of interest was higher, and when the rate of interest came down, we were able to book some good rate, the profitability on that side also. So overall, on the non-interest income and also the overall profitability, we see that FY26 will also be good for us.
Right. If you look at your loan growth, it was strong for the RAM segment. And when I say talk about RAM segment, I mean the retail, agri and micro and the MSME segment. But just 10% if you look at it is in corporates. Do you think that the corporate loan will continue to remain in this 10% range? Also, what's your overall guidance when you talk about loan book growth going ahead for Bank of India?
So if you see our business mix, 6,66,000 crore book, you will see that around 12% of the book is international book and 88% is domestic. Within that, around 57% of the book is the RAM book and the remaining 43% is the corporate credit book. Further into that, if you see the credit growth has been at around 9.5%, let me clarify there that there have been quite a few transactions which we have left where the margins were quite thin and we wanted to protect our margins. And normally, typically what is happening in the market presently is that the AAA and AA corporates are looking for repo rate advances where the margins are even going down. So as a conscious decision, we let go of some of the transactions. However, let me put on record that as on date when we speak, we have a corporate book pipeline of nearly 60,000 crores, which is more than 11% of our global book. And if I tell you about the sanctions that we have conveyed in the corporate book in FY25, they have been more than 110,000 crores. So we have a very healthy corporate book. As regards the growth in the corporate book is concerned, we will continue to target a double-digit growth in the corporate book this year itself.
Okay, and Mr. Karnatak, let's talk about your slippages. This quarter, your slippages have gone up sharply on a sequential basis, specifically in agri and MSME segments. Last quarter, you had mentioned 97% collection efficiency helped your slippages. Can you explain what happened this quarter, what weighed on the slippages this time, and how should one factor in the slippages growth going ahead?
Yeah, so if you see our slippages, which is there in our presentation also, majority of this slippage has come in the MSME and agriculture segment. In the agriculture segment, there was some tweaking by the SLBCs in the states, because of which there was change in the IRAC guidelines in agriculture in some of the state agriculture portfolio, because of which there has been some slippage. However, if you see the overall numbers in the slippage, last year we had a slippage of around 7,500 crores in FY24. This year also the slippage is flat at around 7,500 crore. And out of that, there was one single account of a PSU of around 1,000 crores. Had that not been our slippage for other than that is only 6,500 crores. So that way we were able to maintain our slippages. Further, I would like to tell over here, it is part of the presentation also that our SMA book above 5 crores, which we have declared, is now only 4,900 crores. And that is 0.92% of the standard book only. So we have improved from 7,100 crore of SMA to now 4,900 crores of SMA book only for the 5 crore and above number. So asset quality is good, definitely. And we are sure that the slippage in this financial year FY26 will be much lower than the slippage which happened in this financial year.
So let's talk about your ROA then. For your FY25, your ROA was about 0.9%. Now, when we talk about the interest rate cycle, we are seeing an interest rate cut cycle, overall environment of the CASA. What are your levers, or what's the bank's levers in place in order to get the ROA to at least 1%?
So if you see our ROA has closed at around 0.90% on a YOY basis. And there is an improvement of nearly 20 basis points on our ROA. From 0.70, we have improved to 0.90 as on March 25. However, if you see the quarterly number, it is at a very healthy number of 0.98. And we are touching to that number on a quarterly basis, that 1% number. There will be some stress on the ROA because of the pressure on the NIMs and the net interest income. However, we have a very clear strategy of improving our non-interest income, number one, and number two, recovery. So we will be focusing on recoveries. If you see our recovery pattern over the last 2-3 years, in this year we have done a total gross cash recovery of nearly 9,500 crores, which has contributed to the bottom line. We are also targeting a very healthy recovery, gross cash recovery, maybe at around 10 to 11,000 crore of gross cash recovery for the bank, which will help us improving the ROA. And obviously, as I said before, not to repeat that, we will be also controlling our fresh slippages, which will also help in improving the ROA numbers.
Okay, Mr. Karnatak, thanks so much for joining us and breaking down your Q4 numbers and also giving us a sense of what to expect in the quarters to come. On that note, we'll let you go.
If you like this video, then like, share and subscribe to ET Now.